Hi students, welcome to the video on financial accounting at your fingertips. We have already prepared 13 videos relating to partnership accounts. That means we have completed admission of partner, retirement partner and death of partner. In the 14th video, we are focusing on dissolution of partnership. The dissolution may be either dissolution means the partnership comes to an end. It may be there is simple dissolution and dissolution under insolvency action. So what are the claims of the topic? That is, we will prepare relation account, partners capital accounts if it is under fluctuating capital method, partners capital account and current account if it is under fixed capital method. Then partners loan account and all necessary, if necessary, then cash and bank account. That means we will discuss the simple dissolution, what are the accounting procedures. So all of you know, relation account is prepared in order to realize the assets of the firm, and the amount so realized is utilized for payment of liability of firm according to the provision of the Act. So under simple dissolution, the partnership dissolves when there is agreement among the partner that after completion of suppose 2 years we will close the partnership. When all but one partner died, when all the partner died, leaving one partner, all of you know partnership is the relationship between minimum 2 persons, 2 or more. So when one partner is alive, then automatically partnership comes to an end. So what are the accounting entries on dissolution of partnership? All of you know, in the partnership, the assets account, all assets account will be first closed by transferring to realization account. Assets are showing debit balance, so we will do the realization account debited to all assets at their book values except cash and bank balance and debit balance of profit and loss account. Excluding cash and bank balance, because cash and bank balance will be adjusted at the end. So for cash and bank balance, we will prepare one account, that is bank account, then opening balance will write to balance brought down. After realization process is over, the bank account will be tallied. So a single piece will not be reconciled at completion of realization accounting process. Similarly, profit and loss, that is accumulated losses, will be borne by the share by the partners. So partners capital account will be debited to accumulated losses, that is to profit and loss account, whatever that may be. If there is any unrealized, undistributed profits like general ledger, profit loss on credit side, on liability side, it will also be taken by the partners. So that unreserved account, undistributed account by general ledger account debited to partners capital account. Here it is clearly detailed. For closing assets account, we will write realization account debited to all assets at book values except cash and bank balance and debit balance of profit and loss account. Cash and bank accounts are automatically closed when the balances of capital account are finally paid. Then second, for closing liabilities, all liabilities to third parties, what are shown on the liability sides of balance sheet of partnership, will be closed by transferring to realization account. So first, all assets at their book value will be closed by transferring to realization account, excluding the cash and bank balance and undistributed or accumulated losses or profit loss account. Then next, all liability to third party will be closed by that liability to third party is credit balance, so it will be debited to realization account. That means we'll open one realization account. On the debit side, we'll write all assets at their book value, excluding cash and bank balance and debit balance of profit loss. On the credit side, we will write all liability like by suppose any liability, banks loan, sundry creditor, bills payable, long-term loans, that will be closed by transferring to credit side of realization account. Then any provision may be here, suppose on sundry debtor there is provision for book debts or bad and doubtful debts. So sundry debtor will take it here at gross value, and the provision will be, it is liability, it will be debited to realization account. So what are the provisions? Possible provision may be provision for doubtful debt, provision for discount account, provision for depreciation, joint life policy account, contingency reserve, investment fluctuation fund. These are all liabilities. It will be closed, it will be debited to realization account, being transfer of all provision against assets on dissolution of a firm. Then fourth, for debit balance of profit and account, already told, the partner's current account or capital account will be debited to all profit and loss account or accumulated losses account. If it is fixed capital method, then it will be adjusted to partner's current account. If it is because under fixed capital method, two accounts will be prepared, one capital account will be prepared, another current account. All adjustments are done in the current account. Finally, when there is dissolution of firm, then capital account close and transfer to current account. Then on the current account, the partners either the cash will be given to the partner or cash will be taken by the partner. As a result, the cash and bank balance will automatically tallied, or debit side of cash and bank balance will be equal to the credit side of cash and bank balance. As a result, it is closed, automatically closed. For transfer of accumulated profit losses to all partners' capital account or current account. Then after everything is over, so assets are realized, taken for sale or auction, whatever that may be. So realization or disposal of assets. When assets and liability will be settled or disposed, under this stage, all assets, including unrecorded assets in the balance sheet. Some assets may be there. It is not given in the balance sheet. It may be mistaken. That means they are not included. Those assets may be sold. When asset is sold, definitely cash or check comes to the business. So cash and bank account debited or bank balance and bank account debited to assets. If any assets will be taken by any partner, particular partner's capital account or current account will debited to that asset. So under this stage, all assets including unrecorded assets in the balance sheet of the firm is sold out or realized for cash, or may be taken over by any of the partner, or may be taken over by any creditor. Suppose creditor is there, he has taken over the asset. Then here what we will do, that now we will discuss. In full or part payment of the amount due to them. If any asset is taken over by any creditor, in part or full payment of the amount due to him, the value placed on the asset taken over is deducted from the amount due to the creditor. Suppose the amount due to the creditor is 4 lakh, he has taken the assets of 3 lakh, so 1 lakh we have to pay to the creditor, and balance amount will be paid to creditor. So entry for assets taken over by the creditor is not met. Only entry for net payment of creditor is met, because we have to pay, or the partnership firm had to pay 4 lakh to the creditor, suppose 3 lakh to the sundry creditor, and syndicator has taken one assets worth 2 lakh, then 1 lakh will be given or paid to the creditor in full settlement of his liability. So, entry for the asset taken by the creditor is not made, but entry for the net payment to the creditor is made. All payment of liability to third party will debit realization account and credit to cash or bank account. If any partner has taken any liability, will credit his partner's capital or current account. So realization account will instead of cash or bank, because we are not paying, our business is not paying cash or bank. That means it is taken. The liability is taken by the partner. So partner's capital or current account will be credited. That means realization account debited to partner's capital account. You always remember why we are debiting, crediting realization, because whatever assets and liability given in the balance sheet of partnership are already closed initially by transfer to realization account. So there is no such head as asset and liability. Only whatever asset, as the assets and liability are already closed by transferring to realization account, then when we sell the assets or we will make the payment for liability, we will take the help of realization account. Here we are making the payment. Instead of writing the liability, the syndicator, bills payable or bank loan, we are debiting realization account to cash and bank account, because we are making full payment of liability to third party. Suppose any liability is taken by the partner, so realization account debited to partner's capital account or current account. Then realization expenses. All of you know, when we are preparing the realization account, so under they will debit the realization, credit cash or bank. Sometimes the expenses are borne by the partner, so we will credit the partner's capital account or current account. Realization account debited to partner's capital current account, because the expenses has been paid by the partner. For closing realization account, we will prepare the realization account. We will see if the credit side heavier, then there is a profit. That profit will be distributed among the partner in their own profit sharing ratio. If there is loss, the partner has to burn. First, we will close the realization account, then we will prepare the partner's capital account, then the partner's capital account. If the credit side is heavier, then the payment will be made to the partners. That means partner's capital account debited to bank. Then finally we will prepare one bank account, then the opening balance will write to balance brought down, then payment. Suppose we are making payment to partners, so partner's capital to bank or bank by partner's capital. Finally, the cash and bank account are automatically closed. This is all about the accounting procedure of simple dissolution of a partnership firm. We will solve one problem so that it will be easier on part to understand. So we will take one example. By taking the example, we will solve the problem. So X, Y, Z are partner sharing profit losses in the ratio of 3:2:1. That means X is to Y is to Z. That is given 3:2:1. That means X will get 3/6, Y will get 2/6, Z will get 1/6. Their balance sheet as on 31st March 2024. Balance sheet as on 31st March 2024. It is given. So this is asset side and liability side. So balance sheet will show. So liabilities, assets. So here liabilities, then amount, then assets, amount. So on the liability side, it is written sundry creditors 9 lakhs. So sundry creditors 9 lakhs. Then loan on mortgage 7 lakhs. Loan on mortgage, that is 7 lakhs. Then general reserve 4,50,000. General reserve 4,50,000. Then capital accounts X, Y, Z. X 9 lakh, Y 6 lakhs, Z 5 lakh. So total comes to 20 lakhs. So total of liability side is, that is 40,50,000. 40,50,000. Then assets. Assets, land and building. Amount is 15 lakhs. Then sundry debtors. The gross is 4 lakhs. Less provision 20,000. So net asset is 3 lakh. I already told we will take only the gross asset. We will consider 4 lakh as asset, 20 lakh as provision on liability side. Then stock 14 lakhs. Then furniture and fittings 2,20,000. Then one suspense account. Already you know, when the trial balance are prepared and the both debit and credit trial balance do not tally, then they will take the help of suspense account. If the liability side is heavier, then suspense is asset. If asset side is heavier, suspense is liability. Here suspense is asset, that is 50,000. Then goodwill 5 lakh. Goodwill 5 lakhs. So total comes to 40,50,000. So balance sheet target. Then adjustment is given. That means on dissolution, the partners agreed to dissolve the partnership firm on following grounds. First, book debts realized. The partner agreed to dissolve the partnership and assets are realized as under. To dissolve the partnership, and assets realized as follows. Assets are sold in the market, so assets realized as follows. Book debts, that is sundry debtor. Book debts. So amount realized under book debts is 3 lakhs. Then stock 15,50,000. Stock is 15,50,000. Then furniture fittings 3 lakhs. Furniture and fittings 3 lakhs. Suspense account nil. Suspense account nil. Then X agreed to buy the firm's name. X agreed to by the firm, that is goodwill. Firm, that means you will run the business. X agreed to buy the firm's name and goodwill. He paid the amount of goodwill for 10 lakh. For goodwill, he is paying 10 lakhs to the partnership business. That is 10 lakhs. Then liability are paid like this. Sundry creditor are paid in full settlement. That means entire sundry creditor will be paid by paying how much? 8,20,000. You see here, what was the amount of sundry creditor? It is, sundry creditor was 9 lakh. Now the firm is paying 8,20,000, getting the benefit of 80,000 on closure of business or dissolution. Then land and building sold at 13 lakhs, taken over by Y. So land and building sold for 13 lakhs. Taken by Y. Y has taken on the land and building with the consent of and agreed to pay the mortgage amount. Agreed to pay mortgage amount. How much is the mortgage amount? Loan and mortgage 7 lakh. He agreed to pay 7 lakh. Mortgage amount 7 lakh he will pay. And expenses on realization. Expenses on realization. So asset will be sold, liability will be paid. So whatever the expenses on this procedure is 3,50,000. So realization account debited to bank. There was a contingent liability towards bill discounted. Contingent liability, it is both assets and liability, so we have not taken. Contingent liability written in footnote for bills discounted is 4,50,000. For this we are not worried because it is both assets and liability. But it is given the acceptor of one bill. Acceptor of one bill for 50,000 became insolvent. That means became insolvent and 50 pice in a rupee received from him. 50 pice in a rupee received from him. Prepare necessary journal entry, ledger account to close the books of the firm. So here we will not prepare the journal entry. We will discuss what are the journal entry. Then we will post directly in the ledger. So we will prepare one realization account first. This is, we will prepare one realization account, then prepare capital account, then finally we prepare balance sheet. So capital account, for capital account we have to adjust like this because three partners are there, 1, 2, 3. Here also 1, 2, then 3. Okay. Here we will prepare particulars amount realization account, particulars amount realization account. This is realization account as on 31st March. After 31st March, realization account will prepare on particular date. Okay. Then what are the procedure? This is particulars, amount. This is also particulars, amount. So left hand side is debit side, D I will write credit. Right hand side is credit side. Under capital accounts, will write capital accounts of partners. Capital accounts. So this is particulars. Then this is partner X, Y, Z. Then particulars. Partner X, Y, Z. So we will go through the detail. Already I told you what are the accounting procedure. First, you transfer all assets at their book value, excluding cash and bank balance and accumulated losses, that is profit and loss account. That cash and bank balance and accumulated losses are not given. So we take the entire assets to realization account. Asset is the debit balance, we will close by crediting those assets to realization. So realization account debited to all assets are book value. To all assets at book value, excluding cash in hand and profit loss, debit balance of profit and loss account. So here we will take on gross. Only sundry debtor was 3 lakh 80, gross is 4 lakh, we will take 4 lakh. So the entire amount is 40 lakh 50,000 plus 20, that is 40 lakh 70,000. 40 lakh 70,000, because we are taking at the gross figure. This 20,000, here total asset was 40 lakh 50,000 and there was a provision of 20,000. So we will take asset value as 40 lakh 70,000. On the credit side of realization, will write by provision for all provision will close by transferring to realization account, that we discussed. So provision for bad debt, bad and doubtful debt, provision for depreciation, whatever is given in the question, that will be taken on this side. Like journal entry, provision for bad and doubtful debt, account debited to realization account. Amount is 20,000. This is the third journal entry we have told. Second journal entry, the liability will close. All liability to third party means syndicator, loan and mortgage. These are the liability to third party. So these are the credit balance. It will be debited and realization will be credited. So realization account credited by all liabilities to third parties. To third parties. Here only two liabilities are there. One is 9 lakh, another is 7 lakh. By, yes, one is 9 lakh, another is 7 lakh. So total will write here 16 lakh. Instead of writing one by one, we'll write here 16 lakhs. This is all. Then here capital account credit balance is given. So on capital account, left hand side debit side, right hand side credit side, opening balance write by balance brought down. X 9 lakh, Y 6 lakhs, Z 5 lakhs. Then I told whatever the undistributed profit, that will be distributed among the partners in their old profit ratio. The profit ratio was 3:2:1. So general reserve account debited to realization. Realization by general reserve. So it is 3:2:1. 6. So 4,50,000 divided by 6, 75,000. 75,000 into 3, 2,25,000. 75,000 into 2, 1,50,000. 78,000 into 1, 75,000. This is all. Then the partner agreed to dissolve the partnership firm. Assets realized follow. So whatever assets realized, cash comes to us. So bank account debited. 2, you see, booked at 3 lakh, stock 15 lakh 50, fixed furniture fixture 3 lakh. Total comes to 3 lakh plus 15, 18 lakh 50 plus 3, 21 lakh 50,000. Suspense nil. So 21 lakh 50,000. So we cannot credit the asset because already asset and liability head is closed by transferring to realization account. So whatever we do, we'll write realization. When cash comes to us, we'll write bank account debited to realization account or realization account credited by bank account. That means assets realized. Assets realized. How much assets realized? Here 3 lakh plus 15 lakh 50 plus 3, 6, 21 lakh 50,000. So 21 lakh 50,000. Suspense name. X agreed to buy the firm's name and goodwill. That is, X agreed to buy the goodwill for 10 lakh. So Jama entry will debit the, when X is taking the goodwill, so as that means it is sold. So instead of bank, will debit X account. X account debited to realization account. X account debited to realization account. Realization account. X account debited to realization account. That is goodwill taken by X. So amount is 10 lakh. He has to pay. He has to adjust 10 lakh from his capital because he is taking the goodwill to run the business in future, or he may sell the business to any other party. Because when he is paying for the goodwill, he will take the name of the firm. Sundry creditor paid in full settlement of 8,20,000. So when sundry creditor will pay, he will write realization account debited to bank accounts. That is payment of sundry creditors 8,20,000. Payment of or payment to sundry creditors. How much? 8,20,000. Instead of 9 lakh, we have business is paying 8,20,000. Land and building was sold for 13 lakh, which is taken by Y. Y has taken land and building. So we will debit. Y account debited to realization. Realization by Y is capital account. Y is capital account. That is land and building taken by Y. L and B taken. So instead, suppose it is sold, we write by bank. If it is taken by any partner, its capital account will be debited. So amount is for 13 lakhs. So Y account debited to realization account. Immediately we are posting so that it will be easier on part to solve the problem. That is Y debited to realization account 13 lakh. So we can write payment of assets, land and building taken over. Land and building taken over. Then agreed to pay the amount of mortgage. What is the mortgage loan? 7 lakh. When he will make the payment of mortgage loan, suppose it is, we will pay, we will write the realization account debited to bank. Instead, he is taking, we will write realization account debited to his capital account. Realization account debited to Y's capital account. Capital account, because he is taking the loan. The amount is 7 lakhs. So his capital account is created by 7 lakh because he is paying the loan by realization accounts. Mortgage loan taken. Mortgage loan taken by Y for 7 lakhs. Then expenses on realization 3 lakh 50. So we will write realization account debited to bank account hyphen expenses on realization. The amount is 3 lakh 50,000. Another is there, contingent liability of 4 lakh 50. I told you contingent liability is both assets and liabilities, so nothing to worry, it will not be taken into account. But when acceptor of one bill for 50,000 became insolvent, so bill is dishonored to the extent of 50,000. When bill is dishonored to the extent of 50,000, we have to make the payment of the bill. That means business has to make the payment of the bill. So realization account debited to bank account hyphen payment of bill. Payment of bill on dishonour. When there is dishonour bill, the firm has to make the payment first, 50,000. But after when that bill is dishonored, the insolvent person, his assets are sold by his official receiver, 50% rupee received. So received only 25,000. So write buyer bank accounts. That is amount received from acceptor of bill. Acceptor of bill. That is 25,000. This is all about the posting. Now we will total the credit side of realization account and debit side of realization accounts. So I will total, we have to see like this. So here we total. But the ratio is 3:2:1 is there. It is required because we will either if there is profit, it will be taken by the partner. If there is loss, it will be borne by the partner. The ratio 3:2:1. So debit side here, credit side 20,000. Here it is 16 lakh. Here 20 lakh, 50,000. Then 13 lakhs. Here 25,000. So total credit side of realization is this 5, 9, 50 lakh 95,000. So 50 lakh 95,000. So this side, first assets are sold for 40 lakh 70,000. It is assets are sold for, all assets are transferred to realization account. Assets at book value was at gross 40 lakh 70,000. Then payment to sundry debtor 8 lakh 20,000. Then wise capital 7 lakh. Then bank expenses 3 lakh 50,000. 3 lakh 50,000. Payment of dishonour bill 50,000. This is 0, 0, 0, then 0. No, something is left here. So this is yes, all assets, that is 40 lakh 70,000, it is correct. Then 8 lakh 20,000 sundry debtor we are paid for 8 lakh 20,000. But here, yes, 9 lakh plus 7 lakh 16 lakh. Okay, here 40 lakh 7,000 is correct. Here it is 16 lakh is correct, 1,000 16 lakh. Then assets realized. So bank account debited to realization account. The asset realized is land and building 13 lakh. It is taken by him. Book debts 3 lakhs. So book debt sold 3 lakhs. Then stock 15 lakh 50. So assets realized, here we have done mistake I think, because 3 lakh plus stock 15 lakh 50, furniture fitting 3 lakh, 21 lakh 50,000, 21 lakh 50. That means here stock is sold, stock was 14 lakh, it is sold. Then furniture fittings 3 lakhs. So furniture fittings 3 lakhs. Then book debts 3 lakh. It is done. So goodwill is taken by him for 10 lakh. Where we have written goodwill? We have written capital account debited to realization account. Here we have not written capital account debited to X to realization by X. Okay. Here goodwill we have not written by X capital account. Value of goodwill is 10 lakh. So amount is now 60 lakh 95,000. So this is 60 lakh 95,000. Goodwill 10 lakh. Sundry creditor are paid in full settlement 8 lakh 20,000. So to bank 8 lakh 20,000. Land and building sold for 21 lakh 50 over. Then expense and realized 38,000. Liability 50,000 it is done. General ledger 4 lakh 50,000 distributed. So capital account by general it is correct. By mortgage loan, it is not taken. Mortgage loan, so realization account debited to Y, it is also taken 7 lakh. Bank expenses paid is bank expenses only 35,000, but we have written here 3 lakh 50. That is the error. So 35,000. It is given 35,000. So here will total will take the 35,000. So amount is now 0, 0, 0, then 5, 7, 56 lakh 75,000. So 56 lakh 75,000. So there is realization profit of 4 lakh 20,000 that will be distributed among X, Y, Z in the ratio 3:2:1. So to profit on realization transfer to capital accounts X, Y, Z. 4 lakh 20 divided 6, 70,000 into 3, that is 2 lakh 10,000 into 2, 1 lakh 40,000, here 70,000. Then the realization account is closed. Then on the credit side write by realization profit. The amount will write for X 2 lakh 10,000, for Y 1 lakh 40,000, for Z 70,000. Now we will prepare one bank account. So bank account, both sides should tally. Otherwise there is some mistake. So here expenses is only 35,000, which is wrongly we have taken 3 lakh 50,000. Then all liability will close. The credit side of X is 9 lakh. Then 2 lakh 25,000. Then 2 lakh 10,000. So amount his capital is 13 lakh 35. So 10,000 he has taken the goodwill. So we will make the payment to him 3 lakh 35,000. So 3 lakh 38,000 X will take. So we will prepare one bank account. Under bank account we will post the transactions. So first is here assets. Bank account debited to realization account. The amount is 21 lakh 50,000. Then here we received 25,000 from the acceptor bill who did not or who became insolvent from his official assigned to realization 25,000. This is there. Here 21 lakh 50,000, here 25,000. Here we realize payment to creditors. So realization to bank by realization account. This is left hand side debit side, right hand side. So 8 lakh 20,000 we have written here. Then another expenses 35,000 realization to bank. Bank by realization expenses hyphen expenses amount is 35,000. Then payment of bill region of 50,000 realization to bank. Bank by realization. Then payment towards degenerate bill. Payment towards degenerate bill 50,000. Amount is 50,000. Then here X account debited to bank. So we'll write to bank. Relation account payment here we'll write X account debited to bank. So X will be paid 3,35,000. So here we'll write X to bank. Bank by X capital account. X will take this much. 3,35,000 X will take. So Y. Here it is 13,35,000. Here also it tallies 13,35,000 or 2 for a line to close the account. Then Y. So 6 lakh was there. Opening balance of capital, that is 6 lakh. Then generally undistributed profit share is 1,50,000. 1,50,000. 6 lakh plus 1,50,000. Then mortgage loan 7 lakh. So 6 lakh, 1,50,000, then 7 lakhs. Then realization profit share is 1,40,000. So total credit side of buy is 15,90,000. So 15,90,000. Here debit balance is 13 lakh. So 2,90,000 the dissolver has to pay. So 15,90,000. Then 2,90,000 Y to bank. Bank by Y's capital account. Y's capital account. Amount is 2,90,000. Then we close Z's account. Opening balance was 5 lakh. Then undistributed profit was general ledger 75, 5,75,000 plus 70, 6,45,000. 6,45,000. So we'll direct right here 6,45,000. Then you will total 6,45,000 on both sides. Then draw 2 for a line to close the account. So capital account close 6,45,000. So write by Z's capital account. Amount will write 6,45,000. Now the both sides of bank balance should tally. That means the debit total is 21,75,000. So credit total is here 8,20,000. Then 35,000, 50,000, 3,35,000, 2,90,000, 6,45,000. So total comes to here 0, 0, 0, 15, 21,78,000. So I already told you on realization cash and cash at bank, cash in hand, cash at bank will automatically be adjusted or closed. Thank you for watching the video. Don't forget to like and share the video to all of your friends so that everybody will be benefited. Don't forget to subscribe if you already not subscribed.